Hey, what's up, stock compounders? Brad here. So today I want to talk about Joel Greenblatt's Invest 5 system, I guess is what it's called here. Now, I've been getting emails every couple of days. I must be in their funnel. I'm not sure how I got into their funnel, but today I decided to dig in a little bit because it's Joel Greenblatt, a legend in the investment world. And I wanted to see, okay, what is this product? What is he pitching here? So Invest 5, okay? Effectively what Invest 5 is, it's a system where you invest at least $5 a day automatically, and it goes into an enhanced S&P 500 index fund, which is managed by Joel Greenblatt. So let's talk a little bit about what's going on here, because I think this could be pretty valuable actually for a lot of people who don't want to put in the time to pick individual stocks. It may even be better than just investing in the S&P 500. So let's dive in a little bit here. Talks about who Joel Greenblatt is. Most of you probably know who he is. This is one of my favorite books about the stock market, The Little Book That Beats the Market. So the first thing he does here, after kind of saying who he is, why you should listen to him, a lesson in compounding. Okay, now obviously Stock Compounder, my channel, is all about compounding, but this is a really important lesson here. So essentially what the lesson is, there's two people. One of them start investing $2,000 a year at age 19, okay? And they only do it for 7 years. The other one starts investing at age 27, I think, and makes a contribution every year. Sorry, age 26, makes a contribution every year for 40 years. Okay, so you've got an investor who puts in $2,000 a year for 7 years, another one who does it for 40 years. But the one who does it for 7 years starts earlier, right? Gets a 7-year head start. So let's just zoom to the end here. It's a cool little visual depiction of what's happening here. So here's investor B, $2,000 a year invested between 19 and 25, and then at 26 this other investor starts. So the power here is that you've got net earnings higher for the investor that only contributed seven times, but did it earlier. Okay, a 66-fold growth in those dollars versus only 11-fold, which 11-fold still impressive, but it's just an incredible. It really highlights the power of compounding, the power of time, of getting started earlier, of staying in the game for longer. I mean, you look at Warren Buffett, right? What is Warren Buffett? Is he 90? He might be 90 now. I think he turns 90 this year. But he started investing at 11 years old, right? One of the richest men in the world. But so much of that, the vast majority of that, has really just come in pretty recent years because of the power of compounding, the exponential growth curve. So let's talk about the idea behind Invest 5. Maybe the solution lies in getting back to the simplicity of ninth grade. It's pretty clear that investing early in a disciplined manner is the key to taking advantage of the magic of compounding. Absolutely. But for the most part, as a society, we're blowing it. For those who haven't yet had a chance to start investing, and for those just beginning to work, maybe this means we need a game plan that adds both discipline and a helping hand to investors who should be starting on a long-term investing strategy as soon as possible. That's where Invest 5 came from. It's designed to provide a simple one-step solution that combines a disciplined plan with a strategy that hopefully investors should be able to stick with over the long term. And that is such the key here, guys. Having a plan that you can stick with, all right? And it doesn't have to be this plan. It could be just investing in the S&P 500 automatically. It could be, magic formula stocks. It could be shamelessly cloning great investors. There's many, many options. But the key is really to have something that's simple enough that you can stick with. Simple enough, but you believe in it. You have conviction in it. I think conviction is a big piece that allows us to be able to stick with something, right? We have to believe that it works over the long term, even if in the short term it kind of deviates from what we want it to be doing, the direction we want to see it going. So the discipline. With Invest 5, you choose an investment amount of as little as $5 a day. Now, guys, just to back up here, this isn't a pitch for Invest 5. The value I really see in this is, Joel Greenblatt has had so many years of educating investors, okay? And he's all of that experience is being kind of packed into a product here. And obviously he's going to make money on this product, but you gotta understand what's behind how he's designing this product. Okay, even if you don't buy this, I'm not gonna do this. Okay, but there's wisdom in how this whole thing is set up, the simplicity of it. So let's kind of tease out those lessons. Once a week, the amount chosen will be automatically transferred to your bank and invested in Gotham Enhanced S&P 500 Index Fund. We're going to take a look at that in a few minutes. What is this index fund? The automatic process, which does not require a new investment decision each day, week, month, or even year, critically important, should help make it easier for investors to continue investing regardless of which way the market moves. Think about how important just making that one initial investment decision actually is. If the market goes down, many investors get nervous and either sell the investments they already own or stop investing until the situation becomes clearer, right? This is why, when you see the performance of a fund, right? And then you look at the performance of the actual investors who put money into that fund, usually the fund performance is quite a bit higher than what the investors in it are making. The reason for that is, when the market's going down, when the fund is going down, people don't want to contribute, okay? We're wired to make the exact wrong decisions at the wrong time. So, based on history and logic, these actions make little sense. Over the long term, the market has tended to rise as the economy grows. So we need that long-term picture here. The truth is that stocks represent ownership shares of businesses. Stocks are not just pieces of paper that bounce up and down. As the price of a business goes down, a share of its stock may actually become more of a bargain. Okay, that's really so much of the basis of value investing. We're not looking to the price of a share to tell us what it's worth. Mr. Market is all over the place, and it's there to serve us. If we understand what that stock is worth, we know when to buy, we know when to sell intelligently. Warren Buffett has often said that young investors should be rooting for the market to go down. I am absolutely rooting for the market to go down, by the way. If you were a buyer of stocks over the long term, who wouldn't rather buy a lower price than a higher price, right? People are really strange on that. They should want the stock market to go down. They should want to buy at a lower price. Nevertheless, without the discipline of an automatic investing program, it's hard for most people to continue buying when stocks go down. In most cases, they tend to do the opposite, even though as prices fall, the same amount of money invested can buy even more shares. So a disciplined automatic pre-planned investment program provides a solution. So, this talks a little bit about the investment strategy. We're going to look a little bit more at the fund. Yeah, so let's jump into the fund here. So the Gotham Enhanced S&P 500 Index Fund. It's 100% long, so it's not a long short fund. It's purely long. Now there's a minimum investment. I'm assuming this doesn't apply, right? If you sign up for the Invest 5 program, because you can do $5 a day, which is $1,825 a year. So you don't have that initial $5,000 outlay. Could just be $5. The inception date was, what is that, 4 years and 3 months ago. So we're going to look at the performance. Yeah, this is important. So the fund is a value-weighted, long-only U.S. equity strategy that selects primarily from the S&P 500 investment universe. So it's not necessarily limited to the S&P 500 stocks, but that's mostly where it's mostly the companies that make up this fund. And value-weighted. So the S&P 500 is a market cap weighted index fund. Okay, so the largest companies in the S&P 500. Sorry guys, just got to refresh this. The largest companies in the S&P 500 make up have a higher allocation in the fund than smaller companies. But that's not true in this fund. In this fund, they aren't selected just based on market cap, just based on size of equity. There's some value metrics that are applied to the companies that make up this fund. And, I imagine over time that's going to produce outperformance versus a market cap weighted index. Now we can see how it's done since inception. For the last 4 years and 3 months, slightly lagging the S&P 500, 5.29% annualized, versus the S&P at 15.9%. So, what is that? 51 basis points that it's lagging. Not a big deal. The fees are what I'm more interested in sizing up here. We get the gross expense ratio and the net expense ratio, 65 basis points and 50 basis points. What does my gut tell me about this? When I think of what might be the outperformance of a fund like this, because it's a value-weighted fund versus the fees associated. So you can buy the S&P 500 index with fees of 4 basis points, okay, 0.04%. I think that's one of the Vanguard funds, VOO. I believe it's just 4 basis points. So that's a big difference in terms of fees. And it's hard to say which one is going to do better over multiple decades. I couldn't even really guess. It'll be interesting to see how this does moving forward, especially through like a recession or something like that. That could be telling. But here's some details about the fund. But yeah, I appreciate the framework here because even myself, like someone who puts a lot of effort into investing in individual companies, into my own, emotional psychology, my own emotional biases around investing. There's a lot to be said for investing mechanically, automating the process, and removing as much of that emotional decision making as possible, that irrational decision making. So you guys know I put out a video recently about how would you set up a shameless cloning portfolio. I think there could be some insights in here with this strategy, the Invest 5 strategy, for that shameless cloning portfolio. So anyway, guys, just thought this was interesting. Wanted to share it. Let me know if any of you are invested currently with Joel Greenblatt in any of his funds, or even in this strategy here, because he is a legend. Not a bad guy at all to kind of hook your wagon up to on this financial journey. So anyway, guys, just wanted to introduce this. Thought it was interesting, and I will see you all in the next video. Take care.